Welcome back to the Money Effect. Where we bring you the financial and money news weekly. This week, I'd like to discuss one of the hot topics this week, which is rising inflation. Touched on it previously. As an everyday person, if you're going to the shops, you're buying petrol, obviously, we've got energy prices, your gas and heating, you'll notice that a lot of things are getting expensive. Partly due to the reason of this is supply chain issues. So a lot of the supply chains have had what bottlenecks, what you would call bottlenecks, where getting tough to get these materials in. This is all coming from the pandemic, where a lot of these distribution centers haven't opened. We've had some big casualties this week. If you're a fan of fast fashion, like Boohoo, ASOS, you will, if you look at their share price, you'll see how much they've slumped, and partly the reason of that is because of the supply and chain issues, which are causing, higher prices. What those companies, how they've made money with the fast fashion is that they, buy it, but they produce their clothes in low cost environments and then ship them here, and then they sell them for cheap. Obviously, if the inputs are rising due to inflation, then that makes they would have to sell their clothes at higher costs, which obviously then takes away from the whole fast fashion. So yeah, it's been an interesting week. Inflation definitely on the topic. We've had some big reads on CPI data, especially in America. Some of the central banks have already started raising interest rates. Sweden. So yeah, it's a big issue, and I just wanted to touch on it as an investor. How could you, what are the kind of assets you'd like to be looking at this time? And one of the assets classes is obviously stocks, but in terms of asset class, but being specific, it's banks. Now, all things considered, we know when there's higher inflation, to get it down, the central banks, which would be the Federal Reserve in America, the Bank of England in the UK, they will raise interest rates, and increasing interest rates in theory should lead to more people mortgage prices going up, and obviously people having less money to spend, and that should take down prices. Now, whether that will work or not, we don't know. The problem is a lot of these central banks believe that the inflation is just caused by supply issues, and that when these supply issues wane, which eventually they will when the pandemic's fully kind of settled, and all these supply chains start opening up that were shut in 2020, uh, we should get inflation down. Now, that's all good if there's no demand. And what we don't want to get into is a period of stagflation where we have rising inflation due to supply costs, but demand is not rising at the same time, which we had in the 1970s. So that's where we're at now. It does seem to be, we've had some weak data coming out in terms of unemployment, growth, but all in all, I'd say demand is rising as well. So likely we're going to see some interest rate rises, and probably the banks are going to be the best place to kind of capitalize off this. This week we've seen some big earnings coming out from the big banks in America, J.P. Morgan, Goldman Sachs, Bank of America. They've all kind of way beaten earning forecasts and way, gone. Their stock prices are just climbing through the roof now. So a lot of those banks do have the investment banking segment, but banks is definitely a place because interest rates are going to rise. Like I said, Sweden's already risen it. We're probably going to see that coming soon in England. In America, the Federal Reserve's announced that they're basically considering it, but they just haven't done anything yet. So yeah, banks to me is definitely a place to be, and we can see that in two banks. One is Lloyd. So if we look at Lloyd's share price, we can see that it's really on an uptrend. This past month, even this past, you know, it went down in 6 months, but now the inflation picture's coming back in, and I think this, even though it has risen a lot, I think we're gonna Lloyd's is definitely a company that I would look into, be wary. One thing about Lloyd's, obviously, it has a big mortgage presence. If interest rates go up and people can't afford those interest payments on their mortgages, then they default, and as such, that will yes, Lloyd's will be able to benefit from the extra income they gain, because that's why I'm saying banks. So when interest rates go up, then banks are able to pass those costs on and even more to customers, and hence get more revenue. But at the same time, if you've got a big mortgage presence like Lloyd's has, and customers can't pay their mortgages and they default, that's gonna increase bad loans and things like that. So that could be a negative. But these banks are well capitalized since the financial crisis. So they've got a lot of provisions in place. So I definitely think banks is asset class, and there's probably in the UK the two main banks you're going to look at is Lloyd's, and the second one again is going to be Barclays. Barclays slightly different because it has an investment bank, same kind of thing as Goldman and Sachs and JP Morgan, and hence why I believe Barclays. Yeah, if you look, Barclays is really that was the drop from the pandemic, and it's gone past that now, and I anticipate that this stock is going to keep on rising. Yeah, we might have some pullbacks, but all in all, if you're a long-term investor, I believe this stock is going to rise, and it's something I would definitely get into. Another asset class which has seemingly benefited from is Bitcoin. So there's been a lot of talk about Bitcoin ETF. Now, I'll explain what ETF is. It's exchange traded fund. Um, it's actually going to be a Bitcoin futures ETF. So what that means is they use these futures, which are complex instruments, but basically they just aim to mimic the price of Bitcoin. So you will actually, it's not like you will own any Bitcoin. You will own an instrument who is derived from futures that should move in line with Bitcoin. So if Bitcoin goes up by 5%, the futures will go up by, give or take, maybe 4.95 or 5.05, but it will be around that kind of 5% mark. So that's what the futures are. And obviously, this is good news for crypto people, because ETFs are regulated, and that's one of the problems Bitcoin and crypto has at the moment, is that they're not regulated, and hence they can't be adopted more mainstream. And if we're looking at the Bitcoin price, look, it's duly responded from all this talk. This is just today, and it's shot up. And if it's always sometimes buy the news, sell the rumor. But I expect Bitcoin to have a strong showing at the end of the year. I think this Bitcoin ETF will fully get in. And also, there's a lot of talk about Bitcoin being an inflation hedge. How true that is, I don't know, but it does definitely play off inflation. And if you look at, let's look at, again, we look at the 7 days. If we're going back here to the start of the week, we can see, although it's taken a massive bump, we can see from Wednesday, which is when all this inflation data really came out big, and like all these bank stocks kept on moving higher, and with the earnings, you can see that Bitcoin, sorry, in particular, responded, and so it is kind of somewhat seen as an inflation head. And now you've obviously got this whole Bitcoin ETF. So we've got a lot of predictions about 100k at the end of the year. October is generally November. I've seen big moves in Bitcoin. So if you're looking for somewhere to kind of hedge your money, hold money to the end of the year, Bitcoin is very volatile. It's definitely something I would look into, and look into how it plays off inflation with the Bitcoin ETF news, if that's something that you're trying to get into. So because those are the two things that's driving Bitcoin at the moment. So if you want to invest in Bitcoin, I would suggest that you kind of understand how this ETF is going to affect Bitcoin, and is it really linked to inflation. But these are kind of the things that I would kind of look at the moment. So yeah, thanks for watching this brief video. Yeah, main topic this week of inflation, and yep, subscribe below. Thank you.